he talks about fall being the best time for Bitcoin, and when that's going to come, and the halving and all this stuff.
October.
Yeah, October. But I don't think he's talking about the fall as in like maybe time front, or maybe our time, but like the crypto cycles. But
I got you.
Regardless, what is actually going to bring about the actual price moving up, other than maybe just straight people manipulating it and buying it more. I know that he was on the Paul Barron network talking about 300 billion coming into algo once these ETF gets approved. He was saying
algo or crypto?
You meant Bitcoin?
Into Bitcoin. He was saying that 1%, even if 1% of all of these hedge funds, all these massive players, they have so much in trillions of value that's going to be coming in, that 300 billion could be going into Bitcoin, and that could cause it. And obviously he's back now, so I could let him speak to a little bit of that. But what are your is that your main thought around why the price of Bitcoin will run up? And on the counter side of that, is there a fear that once these ETFs get approved, that it could be at least bad for the price of Bitcoin, because then it could be shorted and there could be other adverse effects with these ETFs getting approved?
I'm super excited about talking to John Wood. Thank you. And learning, kind of more about what's going on in the algo space. And why does that matter, right? Because there's all of these platforms that are building in the ecosystem, and we're about to enter this really bullish period again. And why is that? Well, it's partly to do with the halving, but partly to do with these ETFs. And the ETF, the question about aren't the ETFs potentially bad? No, the bad ones have already been created, right? You can go back and look at the day of the peak in November of 21, right? The futures. Because what a futures ETF does, they're not good. They're evil, right? Why are they evil? Well, futures markets allow you to create any commodity out of thin air, right? So it's not just Bitcoin futures. It's, commodity futures, gold futures, oil futures. And what happens is big institutions are not allowed to go naked short. Right? You can't go naked short stocks. It's against the law. You can't go naked short bonds. It's against the law. But you can go naked short in the futures market. And nobody gets in trouble. Nobody stops you. And so you look at the price of gold. The price of gold's been dead flat for the last 3 years. You think about it, that's not possible, because gold isn't priced in gold. Gold is priced in dollars. And we devalued the currency 50%, which you see that in everything, price of houses, price of food. So we know that the currency got devalued, right? Bitcoin's up 100% over that same period because we priced Bitcoin not in Bitcoin, in dollars. So Bitcoin per dollar went up, but gold didn't. Why didn't gold go up? Well, because JP Morgan and all these big institutions can spoof the price of gold through the futures market and short the shit out of it, technical term. And so the futures things are terrible. So, Bitcoin was in a bull market, and they approved the Bitcoin future. And what happened? Everybody on the big side, as part of what I'll call Operation Choke Point, which I believe was an intentional, designed plan to push down the price of Bitcoin and all the other digital assets, and basically foment fear. And even, you want to go deeper, it's to foment fear, not just in crypto, but in the banking system as a whole, right? And Janet Yellen come out and say, well, if we can't trust the banking system with the SVB thing, maybe you should put all your money with me at the Fed. Are you fucking kidding me? Seriously? CBDC, you want us to give you our money. So it's bad enough it's in a bank, right? It's the bank's money, not your money. But at least the banks, there's been 800 years of trust that works. But the central bank, NFW, no, just no way am I giving them my money so that they could then control it and tell me when I could spend it, if I could spend it. And if they don't like what I say on Twitter, they can turn it off. That's a dystopian nightmare that I have no interest in. But that was their plan, right? Was to create this fear in the financial services system so that they can introduce this control mechanism and surveillance tool. Well, let's go back to Bitcoin and ETFs. So now what we're talking about is this approval of a spot ETF. Well, a spot ETF does two things. One, it actually increases demand for the physical commodity. That's important. So more demand, fixed supply, price goes up, right? That's just math. The other thing it does is it unlocks $30 trillion of money controlled by RIAs, boomer people that don't like this stuff. These are all Ponzi schemes, and they're not real. And so UBS and Merrill Lynch and Morgan Stanley and all these firms have said, no, you can't buy anything related to crypto. Well, here's the thing. When BlackRock's ETF gets approved, and that's the one that's going to get approved, trust me, when that gets approved, all those firms can no longer say no. Like right now at UBS, right? I have this, I call it the Family Harmony account with my brother-in-law. I've asked him, can I buy GBTC? Nope. Can I buy, Marathon Mining? Nope. Can I buy, nope, nothing. Well, when BlackRock ETF happens, they won't be able to stop. So that's going to unleash all this money. Now, it's not all going into Bitcoin, but let's say 10 basis points. That's 30 billion. 1% would be 300 billion. If 300 billion goes into an asset where it's got a $500 billion market cap, but that's not the key. Only about 100 billion is free float. The other 400 billion is lost, stolen, hodl, whatever, Satoshi. You're talking 100 billion of free float. You add 300 billion, price is going up a lot. Okay? And then there will be spillover effects as people say, oh, we're back in a bull market. So now I can go look at these other projects and I can see, are they solving things that I need in my life? And maybe I want to own those too. You couple that with the halving, right? The halving. So if the fair value of the Bitcoin blockchain today is 50K, now how do you get that number? Well, Tim Peterson calculates it. I kind of calculate it using Metcalfe's law, but he has a really good model that does it to the dollar. And it's somewhere in the low 50s, but I'm just call it 50. So if that's fair value, and we're 27 today, 27, 28, whatever. So then it's below fair value. Well, I'm an investor. Anyone who's an investor says, I like to buy things when they're on sale. It's kind of funny. The rest of the world, things go on sale in investing, they run out of the store. It's just bizarre. It's crazy. And yet, I joke, you put wedding dresses on sale, people kill each other to get in the store to buy them, right? They'll trample each other. But you put a good asset like Bitcoin on sale and people run out of the store. So I'm accumulating here. But more importantly, as we get closer to that 50K, the halving is going to occur, April next year. Well, that's going to increase the fair value to 100K. No, that's stupid. No, why would it do that? Well, think about it. Again, if block rewards get cut in half, the price has got to rise in order for the miners to stay solvent. And so there's this built-in mechanism to revalue the price. And if you look at every halving in history, it's added a zero. The total value of the network has gone up tenfold. So we went from 10 to 100, 100 to 1,000, 1,000 to 10,000. This one's 10,000 to 100,000. But we don't stop at fair value, right? Because in a bull market, you go through fair value. And this is the parabolic part of crypto fall. So I said, winter's long over. We got through spring, survived it. A lot of volatility. Hurricane Sam, came and we survived that. Now we're in crypto summer. And summer is a slow drift up toward fair value. And then next year, starting in June, that June to June, that crypto fall post-halving, how high could we go? Depends on how much leverage is in the system. So it'll be good.
And I guess how do you think that a lot of the other things, because the last time that Bitcoin's had its halving, there's been a lot of QE rates going down, the macro for at least for the United States and for most of the world has been a lot different. Right now most charts, especially when you look at treasuries, bonds, the market, and all this stuff is pointing to a recession, right? It's pointing that next year is very likely we're in a recession or on the verge of one. Do you see how can Bitcoin achieve that doubling of price in the midst of a possible recession?
Well, no, a great question, fantastic question. But again, the potential for recession is the result of the withdrawal of liquidity by the central banks, right? So the expansion that we had that drove, the QE era and drove the devaluation of the currency, particularly post the lockdowns in 2020, you doubled the money supply. So it was logical that assets denominated in dollars were going to rise. So real estate, crypto, other commodities, food, everything denominated in toilet paper went up. And the more you devalue your currency, the worse it is. Well, but then they started to rewind that or unwind that. The Fed actually raised rates. They actually bought back bonds. And sold bonds. And they decreased their balance sheet. Well, we had negative money supply growth in the United States for the first time in 100 years. Think about that. For 100 years, we devalued the currency. We sold people this bill of goods that inflation's good for you. On what freaking planet is taking my purchasing power away by stealing it through inflation good for me?
You just watched a clip from episode 76 of The Next Block. If you enjoyed this clip, smash that thumbs up button and subscribe to the channel. Also, be sure to ping that notification bell so you don't miss some of our fantastic upcoming episodes with Anthony Scaramucci, the founder of Skybridge Capital, Jerry Chu, the founder of Lofty AI, tokenizing real estate on the Algorand blockchain, and so many more fantastic guests. You're not going to want to miss those, so ping that notification bell, subscribe to the channel, and then let us know down in the comments below who you want to see on the podcast next. We appreciate each and every one of you, and we hope to see you in the next video. Thanks.